Hey, it's Ed here. Today we're taking a look at technical analysis for SP500 with Elliott Wave Theory. Couple of advertisements here at the start. I finally completed the Elliott Wave and RSI Advanced course, so if you want to master the RSI and want to learn how it can be utilized properly with Elliott Wave Theory, check out the course on Udemy. I've also founded Countertrend Capital with these guys over here, so if you are looking for signal service and more education, check us out here on countertrendcapital.com. And lastly, if you want to educate yourself and support me, you can take a look at Patreon, where you can find Elliott Wave Basics course, access to weekly live streams and extra content overall. Thank you for your support. Let's get into the charts next. So here we are on 1 hour time frame, and today again we're going to be focusing on the structure from the highs of $4,240 around the start of February. Again, we've been in this structure for quite some time, over a month now, and we'll still have the bearish and the bullish options alive. So we'll take a look at closer at what we think of those. So let's first take a look at the bull scenario, which was my favorite previously, where we had this as a 5-way coming into wave A, 3-way pullback into wave B, and then another 5-way structure coming into the lows of that wave C, hitting the 1-to-1 extension of that wave A for that C wave, looking very decent. Since the bottom here, around the March 13th, we had this as a coming in at 3-wave structure into wave 1. We had a only potential for a bullish structure at that point was a diagonal, which we had again talked about on that video more than a week ago. And then we had a 3-way structure, 3-way structure, 3-way, and then this last leg, which gave us this potential expanding leading diagonal. Now again, to note on SPX, which is a cash market, we had a more of a contracting looking leading diagonal. Again, a bit different look, but again the same idea of having that bullish possibility. Now, since this high was put in place, we had, or I had labeled this as a wave 5 and then a wave A or wave 1. Again, both are possible depending on how you have the higher time frame count set up. You might have some biases there, but this coming down as a 3-way structure, in my opinion, looked the best. This structure again had coming down in 3 up, and then another 3-way structure down. And then at that point again, we were looking at some kind of pivot here. Last time we were talking about the minimum time requirement that I shifted more from the 23.6 or 38.2 to the 23.6 hit actually perfect in here. We actually had it down to the 15 or 5-minute time frame as the low. And again, I'm not going to be analyzing this too much. At the moment, it just looks a lot of overlapping structures, and the only bullish structure I could be making it is some kind of diagonal. This could be a wave 1 at here, 2, 3, 4, and 5. I'm not quite sure here yet until we take out some of these lower levels. Again, we've been just creating higher highs constantly here. We have not had a real pullback taking and changing the market structure at all. So again, for that, or until that point happens, I'm not still looking at this. Again, probably setting alarms here is a good thing around the previous lows of 39.89, just to see when the market structure changes a bit, and you'll be notified for that. Again, we shifted right between the 0.5 and the golden pocket, which is typically not a good level of or area of level to stay at. So I still have a possibility here that we are going to be taking out these lows still once more before going to the upside again. Generally, after at least a contracting diagonal, the wave length in time here and the depth of it, meaning the price, is not that great, and generally the whole retracement itself is kind of shallow overall. So again, we don't need to be expecting one more low, but again, this area here where we landed is kind of suspicious in that sense. But that's the bull scenario. Let's take a look at the bear scenario, where we were talking about before as well. In this one, we would have this as a 1-2, 1-2. Now, invalidation for this whole idea, complete invalidation of the bearish impulse wave structures are at these highs based on the retracement that this structure can't be a B wave of this kind of structure where this wave 2 would be shifted over here. I don't think that looks good at all, so I'm going to be scrapping that completely if we take out these highs. We can take out these highs for sure. We still would have some kind of a potential structure like this, but if we take out these highs, then it is all off the table. Now, getting this wave 2 up in here, we have a couple of different ways of looking at it, like this or like this. I kind of like the latter one, this one that I just drew in, based on the structural and the extensions. If we are just looking at it like this, we can see that we hit the 1-to-1 pretty much to the dot here. So again, this was the Fed news event here before we started to dump down. We were talking about the setup that we would have to the downside here on Discord, where we had this as coming down in 3, then having this as 3. I took a short here against the highs and we did get that drop. And the bearish option here at the moment, again, if you want to be having it as an impulse, would have to be something like this, where we would have 3, 3, some kind of 3 here, 3, and then 3. Again, these two here don't really look like they are 3s too easily, but again, this dump here that where we had this potential 3 wave is again during the Fed talks and such like that. It is not very how do I say that? It's not very easy to see and easy to say that this is indeed a 3-way structure, although on smaller time frames it definitely looks like it. So I'm not putting too much pressure into that being just a 3-wave, so that's why I'm kind of more lenient on this overall structure here, allowing these kind of structures to be in 3 ways as well, although it's not that pretty. Now, although I had the short here, again we had the possibility of having this as some kind of diagonal ending at these lows. I seem to have 2 lines here, it's all good. But we were looking at this potential wave 2 here as well. Now 23.6 again that we were looking for is right here at the market close basically, and tomorrow again, or basically whenever the markets open, we are going to be having again basically the minimum requirements of time already met. So again at that point we would be looking for potential dump again. Now if we take out these highs, then obviously this is not right, and instead we would have this as a 3-way structure overall for the more bull count that we already talked about, and having this as the wave 2. Again, I would not long at these tops, I would long here against these lows. Again, better risk to reward ratio, making your risk way less. And same for the bearish count, I would not be shorting here, because again, based on the structures, I would have the invalidation of my count all the way up in here. I would also wait for the pullback to happen before making any of those kind of moves. But I think that is going to do it for this video on S&P 500. Again, if you made it this far into the video, I would appreciate the likes and comments on this video. Also, if you want to educate yourself, check out the course on Udemy and the Patreon page on Patreon, of course, and the trade setups. Check out CTC. Thanks for watching and see you on the next video. Bye bye.